Yo, what's going on, guys? Bexio back, and today we've got a brand new video going to be talking about ways to invest your money that can make you rich and won't have tons of overhead where you'll need to be constantly on top of it. Things where you don't have to pay attention to news cycles and what's really going on in the world and stocks and all that types of things. And it's just passive, and you can let it do its thing and let compound interest take over and really do the heavy lifting. So the first investment you can make that is the easiest and most passive is going to be an ETF index fund, where you can invest your money and literally not have to worry about anything. It diversifies for you because of how ETFs work, and there are tons of stocks in them. So you're instantly diversified when you buy in, which protects you, obviously. And they outperform 95% of traders when you take a long period of time. So if you take any like 20-year period, an ETF, just holding an ETF is going to outperform any like 95% of active traders. So that's kind of crazy that you can just hold an ETF and it'll outperform almost everyone. That includes yourself actively trading, or someone else doing it, or even a professional doing it for you. It'll just outperform them if you just buy and hold ETFs. So some of the most common ETFs and most popular ones are like Vanguards, like VTI and VOO, which they overlap quite a bit, VTI and VOO, but VTI is the total stock market index, and then VOO is the S&P 500. So with ETFs also, you can get paid a dividend, so you can kind of get like this passive income type thing in the form of dividends. And we can look at my VTI holdings here, and I can show you exactly what a dividend would look like. So obviously I have just under $5,300 in VTI here, and the last dividend I got was right here for $16.02. So that is obviously not too bad for like 5,300, 1602 every quarter, but it does fluctuate the dividends here and there. Fluctuates a little bit, obviously, depending on the price of the ETF, and sometimes the dividend yield changes a little bit too. So it does fluctuate, not a ton, and so it's going to be about $72.86 for the year paid in dividends through VTI, and that's off of $5,300, a little under $5,300 of total invested in it. So not too bad. Obviously, it's not like a dividend stock or a dividend thing, but that's like a little bit of money you can get for just buying and holding the ETF. And when you compare this, $3,500 was my initial investment into VTI, now worth almost $5,300 in about a year. So not too bad for returns either. So the next investment is going to be blue chip stocks, things like Apple, Microsoft, Amazon, Facebook, you know, those big cap or mega cap stocks, the trillion-dollar companies, and the companies that have been around for a long time, where you know they're not going anywhere, they're not at risk of like going bankrupt or not making money. So it's just a lot safer to hold them. Now this is more risky than like an ETF. So when you go into blue chip stocks, it's more risky, but it's not really that risky when you break it down. So the benefit of like blue chip stocks and being in these is having more growth on your side, or at least being in like growth blue chip stocks, because there are dividend ones and all those different like categories. But the ones I'm in are like big tech, Apple, Microsoft. I don't know if I would count Disney as a blue chip stock. They've been around for a long time, we'll say that. But you can even compare. We can compare my Apple holdings to my VTI ones here, and you can see have just under $4,700. So relatively close to the same amount of money. And then the dividend is substantially lower. And you can see right here was the dividend was paid with $7.22, obviously paid quarterly. So that's a pretty good dividend for, you know, Apple, where their growth rate for the last year was 90%, or like over 90%, compared to VTI, who had like a 51% return. So what you exchange for a smaller dividend, you make up for a lot in with growth. So that's where the difference comes between the two. Take on a little bit more risk for more growth, and a little bit less of a dividend. But unless you're building like a specific dividend portfolio, you really shouldn't care about dividends too much. They're kind of just, the way I see it is like free cash to reinvest, which is what all my dividends do, is just get reinvested as soon as they get paid out. The next thing we're going to be looking at is something a little bit more controversial, a lot of people on both sides saying it's either worthless or worth everything, and that is Bitcoin. So going into the crypto world here. Now, I think Bitcoin is going to change the world and have such a big impact on how the world runs and how it works in the future that we're still at the very, very beginning with Bitcoin. So that's why it's on like these things that can make you rich relatively easily, because it's not something you got to babysit and keep in the headlines. It's kind of proven because it's not super old. It only has like a little bit more than a decade of history. So, but when you look back at that decade, its annualized return is 200%. So tripling your money every year, which is ridiculous. So, just seeing that and seeing what it can do in the future, how it can change everything with how it works. But the biggest problem with Bitcoin for a lot of people is going to be the volatility. So if you don't have the stomach to watch the price go up and down massively, either don't look at the price and then you solve your problem, or you might not really be able to be in something this volatile, because if you get scared and sell, then you're putting yourself at a loss, and then if it rallies, then you're going to buy in at the top, and you're going to get stuck in this loop of selling when you're scared, probably taking a loss, and then buying back in when it starts to go up, when you should have just held, and then the time it goes up, you start making money again. But a lot of people don't like the volatility, and I don't think can really handle it. So, and you can also make passive income with your Bitcoin in the form of interest with BlockFi. So you can sign up with the link in the description for BlockFi, and you can get $250 of free Bitcoin for signing up. But on BlockFi, you can earn 6% interest, which is ridiculously more than any bank account you'll ever find can do. So that's where it's super competitive and super just great for interest rates and like passive income. So right now it's great, and I don't know how long these rates are going to continue, so take advantage while you can and enjoy the rates while they're here. Hopefully they're here for a long time. We can all enjoy 6%, which is absolutely crazy. And the final asset that you can invest in now that will make you rich is Ethereum. And we're going to another crypto here, the second largest crypto by market cap. And I think Ethereum has the exact same potential to change the world as Bitcoin does. When I think Ethereum and Bitcoin is two completely different use cases, which is why I think they're both insanely valuable in their own way, and they're not competing with each other, which is a big deal. Like, Ethereum has so much utilization in how they can decentralize the world and be like programmable money and do something for if you want to build on Ethereum, you can, and then create a token or create a project, and it just like legitimizes infrastructure on crypto and brings a lot more people involved. If you want to build on it, it's a lot easier to do that. So I think that's something that it has for an advantage for like the rest of the world. We don't see something that can do that right now, and it's going to have that potential to change the world, and in turn the potential to make early adopters a lot of money, if you want to think of it in that terms, or early adopters a lot of influence over how the Ethereum network is going to do, especially if they go to, or when they go to, proof of stake. And you can do the same thing on BlockFi with Ethereum earning passive interest or passive income in the form of interest. But Ethereum is like 5.25% interest, and which is still ridiculous and way better than any bank account you'll find. And the returns of Ethereum are actually outpacing Bitcoin for 2021. We'll see how everything ends up, but I think, we're in for a great year for both Bitcoin and Ethereum, and you're going to see altcoins pop up here and there, but altcoins are something you have to pay attention to a lot more, know the news cycle, know what's going on with them, and make sure that nothing bad's happening that's going to cause them to become worthless in overnight. And then with Ethereum comes the exact same thing of stomaching volatility. Either don't look at the price, or be willing to stomach the volatility and know why you invested, and make sure you're planning for that future instead of worrying about what's going to happen in a week. Worry about what's going to happen in 5 to 10 years. So guys, that's going to do it for this video. All of these I have money in and I'm invested in. I invested in VTI. I have Apple, Microsoft, those blue chip stocks. I have Bitcoin and I have Ethereum. So all of these I'm invested in. I'm not like telling someone to do something that I wouldn't do, because that wouldn't make sense. But let me know what you guys think. Are you more stocks or more crypto? And as always, don't forget to smash that like button and subscribe. You're on the road to 1,000 subscribers. I'll see you guys in my next video.